Banking, cash, bank runs and capital controls. In this video I'm going to focus on currencies used in economies. Specifically, I'm going to differentiate between the two types of currencies in circulation at any given time. And then I'll be relating such things to panics that occur during a financial crisis, and I'll be talking about the bank runs that can be caused by panics. Let's start by discussing cash in an economy. First off, I have to define what I mean when I say cash. It should be fairly obvious, but just for the sake of clarity, I'm basically talking about the physical paper money and metal coins in circulation, the ones we use every day in stores and such like. So this includes all the banknotes and all the coins of whatever denomination. These notes and coins are produced by the national mints of each country, or in the case of the European Union, they're created by the Mint of the European Union. I shall refer to these notes and coins from now on simply as cash. I now wish to make a distinction between cash and any digital currency in any bank or on any computer system. So what I'm talking about here are the figures you see when you log in to an online account, or the figures you see when you go to an ATM to check up on your balance, or the figures you see on a monthly bank statement. I shall refer to these from now on as digital currency. The cash and digital currency combined go to make up the total amount of currency in circulation in a country at any one time. If I were to go out onto the streets in any country and conduct a survey asking people what percentage of cash there was in an economy as compared to digital currency, I wonder how many people would be able to give me the correct figures, or for that matter get anywhere near to giving me the correct figures. The actual amount of cash in an economy is only about 5%. The other 95% is digital. My guess would be that most people responding to this survey would have given me a figure for cash that is far higher than a mere 5%. I have to say that I myself was surprised when I first learnt about this. Anyway, my point is that very few people seem to know about these facts, yet they have massive ramifications, especially with regard to what I'm going to talk about shortly. I wish to move on now to talking about fractional reserve banking. I'm not going to talk in depth about this. Instead, I shall refer you to an earlier video I made entitled Fractional Reserve Banking, so you can get a better understanding of this topic. Suffice to say that the bank is legally required to keep only a small percentage or fraction of currency on its records at any one time. So, for instance, with a fractional reserve ratio of 9:1, the bank can loan out up to 90% of any deposits made by customers. It's therefore only required to retain 10% of the currency in connection to customer accounts. And even then, this might not be in the form of cash in its vaults. It could just be digital currency on a computer system. Something of an interesting aside, I believe that I'm right in saying that prior to the digital revolution, cash was obviously the only thing used, and this was the reason for there being many more bank heists back then compared to nowadays. But anyway, back to the matter at hand. Given the banks now don't hold much cash in their vaults, what do you imagine might occur in the event of a financial crisis? In a crisis, banks can get into financial trouble, and this can cause some degree of panic in the populace. Fearing bank failures, people go to the bank to withdraw the money in their accounts. And, as I'm sure everyone knows, this is called a bank run. In Britain, during the financial crisis of 2007-2008, the high street bank Northern Rock found itself in trouble due to its having made some bad strategy decisions in the years prior. The BBC nightly news programme announced that Northern Rock had turned to the Bank of England for financial support. And the very next day, there were queues of people outside the branches trying to withdraw their money. It was the first bank run in Britain in 150 years. The bank was nationalised a few months later in order to save it. In short, a financial crisis can cause severe problems in an economy. People get panicked. Panics can precipitate bank runs. Such things, unfortunately, are made many times worse than they need be by a fractional reserve banking system, because the amount of cash at any one bank holds is minimal. When times are good, the fractional reserve banking system works very well for the banks. But when times are bad, the fractional reserve banking works against them, and it also works against the people that have accounts in failing banks. To prevent bank runs, banks tend to impose what the banking business calls capital controls. This basically means the banks won't let you have full, unrestricted access to the money in your accounts. They might limit the amount you can take out of the accounts. They might also limit the amount you can spend on goods or services by means of your debit cards or credit cards. Also, if you have a large amount in a savings account, you will not be able to access those funds in the same way you did prior to the crisis. If you think what I'm saying is far-fetched, I refer you to what happened in Greece not so long ago as a real-world example. The situation in Greece should give you a good idea of what a crisis might look like in practice if you're at all interested. I would certainly recommend you looking into this. Banks could even do something more extreme, such as closing their doors and announcing bank holidays. In my opinion, it's very likely that there will be another financial crisis in the not-so-distant future, and it will probably be a lot worse than 2007-2008. The way I see it, it's just a question of time. And I don't want to be one of those people having to queue up trying to get money out of an account. So, to avoid this, I've taken preemptive measures. I only keep the absolute bare minimum of money in my bank accounts at any one time. I only have funds sufficient to cover any bills that need paying by direct debit or whatever. At this juncture, I want to make it absolutely clear. I'm not necessarily advising you to do the same as me. I'm merely telling you what I do. And I'm also expressing opinions based on what I've learnt over the years. Be aware that what I've said does not amount to financial advice. Please don't do anything based on what I say without having done some research of your own and then carefully considered things. You need to do your own due diligence. That said, let this video serve as a warning to you. Finally, as another interesting aside, our overlords seem to be waging war on cash, trying to eliminate cash altogether and make economies 100% digital. This is, in my opinion, simply to do with control. Our overlords love control. They are not yet in full control, but make no mistake, this is their ultimate aim. It's down to us as to whether we are willing to surrender to them and give them the control that they so desire. Wise up and rise up.